every trade is a winner, and today we're going to break down my first loss of the year. A $17,630 loss trading the Dow in the futures market. But more importantly, I'm going to show you exactly where things went wrong and what I could have done better, and key takeaways that will make you a better trader as well. Stick around till the end because this review is packed with insights you don't want to miss. If you're new here, my name is Tori Trades. I've been trading the markets for 10 years now. Today, I'm walking you guys through a trade that didn't work out so that you can learn from my mistakes and avoid them yourself. This trade was a short position on the YM where I anticipated that the price was going to drop. But the market didn't quite give me the setup I was looking for. So let's go step by step and break it down. And if you're new here and you don't know what this platform is, it's called TradeZella. This is where I analyze all of my trades, track my progress, see the commonality between winning trades and losing trades, and optimize my strategy. This is a great place to backtest as well. They have an incredible new backtesting feature. Highly recommend checking it out. Use code Tori10 to get 10% off of the monthly subscription or Tori20 to get 20% off of the yearly subscription. It's almost as important as TradingView itself when it comes to trading platforms. Sure, you need somewhere to mark up your charts, do your chart analysis, to execute your trades, TradingView amazing, but where do you go to actually analyze your winners and your losers and modify and review and adjust? And that's TradeZella. All right, so far, we are looking at 5.67R for the year. 4 trades total, one of which is still currently open. We'll get into in a little bit in another video. But so far, I've had 3 trades for the year total. 2 wins and 1 loss. Okay, so first let's go over the trade setup and execution. I hate saying that word. Is there any other word that I could use besides execution? It's so aggressive. It's just the act of placing a trade or closing a trade. Anyways, so let's go over my entry plan and market analysis. So TradeZella allows you to kind of go back through and replicate how your chart was marked up when you place this trade. So since there are no chart markups here, we're going to do it together. I'm going to show you guys where I had my lines, why I took my entry, and what I was anticipating the price to do. So first and foremost, we can see very clearly that the YM, the Dow, has been in consolidation. We've got highs over here, and we've got lows over here. These are some pretty obvious consolidation areas. But I took it a step further and marked up even more consolidation areas. I marked up this one here, and I marked up this one here. All right, so you can see many times price was just bouncing in between all of these areas. Couldn't break past this 45,139, and it couldn't quite get below this 44,027. Acted as resistance here, acted as support, and then these micro, I guess I call them these micro support and resistance areas. These were less key levels, but many touch points where it just couldn't quite break it. Finally did, touched it from the other side. It acted as resistance over here, fell down, broke through it as if it didn't even exist, and then acted as support, then broke through. Then came back from the other side, acted as resistance, broke through again as though it didn't even exist, broke through again as though it didn't even exist, and then acted as resistance. So these micro key levels here, still incredibly significant, but these more important key levels, the price wasn't able to break through. But now, these still aren't reasons that indicate an entry for me. Even though we have our charts marked up with support and resistance here in key levels, none of these signified an entry for me. So I always utilize these to help me identify areas of consolidation or for take profits, but I never use these as entries. I will use them as added confirmation when taking my entries, but it's always going to come back to the trend lines. So where were my trend lines in this time? My words aren't working so well. This is what my chart looked like when entering my position. We got a break of a 1-2 touch point trend line, and I took my entry here at 44,463. Now looking back, was this a strong enough setup? Let me walk you through the mindset here. We're working with all-time highs in the indices and a lot of uncertainty in the markets and really in the country. A lot of uncertainty happening here. Another thing you might not be able to see through the chart analysis is there was a moment of impulsivity. One, because I'm trading the YM. I haven't traded the YM, I think, in over a year. So a very impulsive decision to go ahead and take an entry on an instrument that I haven't traded in over a year. So with that, and a combination of the uncertainty in the markets and the break of this trend line, a fairly impulsive entry. Not enough information or data behind this entry, but an entry nonetheless. We've got an action line and we've got a safety line. An upward line was broken. As long as it could continue to travel along this downward trend line, I'm safe. I'm happy. We get into the trade. It's immediately working in our favor. We're up almost $18,000 right off the bat. So the YM gapped on Sunday in my favor, which if you were in a long position, I'm sure that would have hurt so much. But this is a scenario where the price gapped in my favor, but it happened so quickly I couldn't even capitalize on this candle. Even though it's a 4-hour candle, it made this entire move within 5 minutes of open. So I wasn't even able to capitalize on any of this move here without it immediately coming back to me. So I got to see I was up 18,000 for about 5 minutes and then right back to break even. Now, as a few 4-hour candles go by, we're in drawdown, but it's still respecting my downward trend line, so I'm okay, I'm comfortable. And then we move back to break even. Then we're in drawdown again. My alert goes off that the price touched my trend line, but that's never my indication to close. The price has to cross it. So I'm at least on high alert, thinking I may need to consider closing this loss soon. But then we respected and continued down, and I'm making money again. I wasn't satisfied with this move here. I would have considered taking profit if it had gotten a little bit closer to this 44,027, but still not the move I was anticipating. I was thinking a full retracement here, a full dip, somewhere closer to this 42,000, but it would have taken a lot longer for price to fall down that low. So I'm sure I would have clipped out and capitalized when it got closer to this 44,027. But the very next candle, we moved right back up to break even. And it started going against me, back to break even. And then finally, we got the break. We got the break of the downward trend line, the break of my safety line. So my initial risk was 17,000 here. And that's if price immediately moved against me and broke this downward trend line. But now as price progressed and continued to move, my stop was actually able to move lower. I was able to mitigate that risk and minimize it. But did I? No. Nope. I still allowed it to hit that original stop loss, which it should have been closed around this 44,645 area. But I was holding on to this trade a little bit longer. I really wanted to give this every chance to turn around and even wanted to see if it would continue to respect this kind of micro key level here. And then once it finally crossed my horizontal key level at this 44,771, I said, all right, deal's over. We closed it. We closed that original 17,000 risk that I was anticipating, even though I should have trailed it lower and taken a much smaller loss. But that was the name of the game here. Now, something I want to go over psychologically, it was kind of nice to get that first loss out of the way. Sometimes you got to do it. I was on a winning streak since September of last year, and then I finally got my first loss. So it was nice, felt like I kind of ripped it off like a Band-Aid, and I almost was like, told myself that, you deserve that. I mean, in the nicest way, I was like, what are you doing trading the YM? You don't trade the YM. You trade oil and you trade platinum, which also, as a result of me being in this trade, I don't trade multiple instruments simultaneously. So I am a one trade at a time trader. So I missed some pretty awesome moves that were happening in crude oil and platinum both just to stick this trade out and see it through, which it ended up not working out. But something I want to go over is psychologically, if we look at what the YM is doing now, let's just take a peek. I just want to show you guys what the YM is doing. We're going to go to the 4-hour, and I'm going to show you guys my exact chart markup. It did finally make its move. So I was just a little bit early. Now, if you were in my position, you might be saying to yourself, I shouldn't have closed. I should have held it. What if the price did not do this? What if it didn't fall and it continued up and you didn't close? We're looking at a pretty big loss on your hands. For me specifically, this was just 17,000. If it made this same kind of move in the opposite direction, we're looking at a $50,000, $60,000 loss here. If I would have had the mindset of, man, I shouldn't have closed that trade because look, it worked out. The repercussions of telling yourself that and then making that mistake in the future could be dire to your capital, could result in a blown account or a giant loss that you have to now make up. So I just told myself I was early. That's okay. You can always get into the next move. Now, did I? No. No, I didn't. And it's a matter of kind of preserving mental capital so that you can allow yourself to take the next setup if this one didn't work out. Now, what's cool about this next setup is this would have been a much lower risk setup. This would have been a 1-2 touch point trade as well. Same playbook here, 2 touch point trendline break. But this would have been a much lower risk setup because look how close the price is to the downward trend line when it broke. I would have only had to take a $6,000 to $8,000 loss taking this setup instead of the original, which was much higher risk, taking that $17,000 setup. So let's go over what I learned about this trade. The first thing I learned was I acted impulsively, trading an instrument that I haven't traded in a very long time. The second thing that I learned about this trade is it wasn't an A+ setup, wasn't the greatest setup. But now let's go through the criteria. Was all criteria met? Were we in trending markets? When I took my position, I'm going to say no. We were in consolidation, so we can't check off this box. The market conditions were not great. All right, did this trend line have 2 touch points? Yes, we had 2 touch points here, 1 and 2. Did this trend line have a week's worth of data? First touch point is back on January 13th. Second touch point is Monday, February 3rd. Absolutely over a week's worth of data. And then exit criteria. Was safety line hit or support and resistance? Yes. So we got 3 out of 4. We weren't in trending market conditions, so we met almost all of our rules when it comes to the 2 touch point trend line break. But what I learned was, 1, I acted on impulsivity. 2, it wasn't one of the greatest setups. And 3, I didn't allow myself to preserve mental capital to take the next setup, which ended up being the 1. And then the last thing, it's not what I learned, but something that I'm very aware of, is I will never tell myself that I shouldn't have closed. Because if the price hadn't done what it did and move in my favor and moved in the opposite direction, I don't ever want to convince myself that I need to hold in hopes that it would do something like it did here in another situation or in another scenario or in another trade. When in reality, it can absolutely make that kind of move, but not in your favor and against you. So we're not trying to blow accounts. We're trying to mitigate our risk, manage our risk, make sure our losses are tangible, and learn from them. So even me as a 10-year trader, I'm still learning things about myself each trade. So I wanted to be 100% transparent with this trade and to show you guys that we don't just learn from our wins, we learn from our losses as well. Let me know in the comments if you guys would have handled this trade any differently. And if you found value in this breakdown, it helps the channel so much. If you hit that subscribe button, hit the like button, and drop a comment. And if you guys want to see any new video that comes out, make sure to turn that notification bell on so that you know every single time we drop a new video. Okay, and then super bonus, if you made it to the end, if you've made it this far, super bonus. Some things that I'm thinking psychologically. Also, when I said some, the urge to say, buddy once told me, but I'm not, but I did. Taking this loss also was a bit of a relief because this loss also happened after I made the decision to not hold myself to this insane standard or this insane goal to make $500 to $1 million in trading profits. So I have to make $44,000 a month in order to get myself to that goal. This already set me back. And luckily, I had already kind of stripped myself of that goal and of that pressure and of that weight so that when I took this loss, it felt almost like a relief. And that I'm still trading really well for the year. And that even though I'm not hitting this crazy goal, I'm still continuing to trade well. Every trade is one step closer to at least trading well. And that is my goal for this year, is to just trade well, to not let anything influence my decisions, and to continue what I'm doing. So that is all I have for you guys. Thanks for hanging out this long, if you did. And I'll see you guys in the next video. And I'll see you guys in the next video. My foot is falling asleep and I don't understand why. Maybe it's because this chair is made of plastic and it's cutting off circulation on my butt. Getting in the zone. We got this. Here we go. We're good. We got it. Here we go. We're good. So stick around till the end of this video. You don't want to miss all of the insights that I've got. So stick around till the end of this video. You don't want to miss any insights that I have. Stick around because this review is packed with insights you don't want to miss. Stick around till the end of this video. Stick around till the end because this review is I bit my tongue. Come on. Okay. All right, I'm ready. Here we go.